You're listening to Heritage Radio Network.
Welcome back to Business of Drinks. I'm Erica Ducey.
And I'm Scott Rosenbaum.
Today, we're talking with Mack Hueber, president of Ayrloom. Now, this is the cannabis and hemp brand that has rocketed to prominence in New York State. Ayrloom was born out of Beak Skiff, which is a fifth-generation apple orchard in upstate New York. And in less than 3 years, it has become the number one cannabis drinks brand in New York State, moving some 250,000 cases of beverages a year and hitting an overall sales run rate for its wholesale sales of $50 million annually.
Wow. Yeah, it's incredible. It's a really exciting conversation. Mac shares why he decided to get into cannabis beverages in the first place and some of the real challenges of growing cannabis in New York. It's such a wide-ranging conversation, right? You also go into what it's like to operate under 3 different regulatory environments: alcohol, hemp THC, and cannabis distribution channels, and how these all these differences and channels and regulatory environments kind of affect everything from compliance to marketing to margins.
We'll also get into Ayrloom's decision to build one of the largest cannabis beverage bottling facilities on the East Coast before the company had even secured a license, and how the brand was designed to resonate with a broad range of audiences, from longtime cannabis consumers to the canna-curious who might otherwise be hesitant.
Plus, Mac shares his take on the state of the U.S. cannabis beverage industry, where the opportunities are, particularly, headwinds as well, and also why his team is betting big on being nimble in a category where the rules can literally change overnight.
But if you're a drinks entrepreneur in any category, this conversation is full of insights on scaling fast while optimizing capital allocation and distributor strategy in a changing regulatory environment.
So grab a seat, maybe a notebook and pen or pencil, hopefully a THC infused cider, and let's get into our conversation with Mack Hueber of Ayrloom.
And now, a word from our sponsor. Is your drinks brand looking to start or expand import and distribution?
Whether you're seeking to enter new markets or you're unhappy with a current distributor and desiring a better fit, you should know about Swig Partners.
Founded by industry experts Eric Siegelbaum and Amy Troutmiller, Swig takes the guesswork and the legwork out of distribution strategy. Swig helps brands and distributors find the right fit for long-term relationships and sales success.
US-based importers and distributors should reach out too. With Swig, they can explore new products for free. And brands, you can get $100 off by mentioning Business of Drinks. Find out more at swigpartners.com/business of drinks. That's swigpartners.com/business of drinks.
Mack, thank you so much for coming on the Business of Drinks.
Thanks for having me. I'm excited to be here.
Yeah, so many exciting topics to dive into. So first, I want to get a sense of your background. I know that your career started outside of cannabis and beverages. What drew you to joining this fifth generation apple orchard and hard cider maker to help launch its cannabis brand?
Yeah, so prior to working here, I was working down in New York City and Wall Street for about 9 to 10 years, but born and raised up in Syracuse, New York, where we are today. And I knew I wanted to be moved back to my family. There wasn't just a good career transition from Wall Street to an opportunity in Syracuse. I knew of Beak Skiff. It's been a place that I used to go to all the time as a kid, and met the family, and was, at the time, they were looking for a CFO. So it made sense at the time to make that jump. And this was before I had a wife, a kids, the whole family, so I could take that risk. But at the time, actually, cannabis was not even in the discussion. This was 9 years ago. So this was actually really the beginning of the hard cider growth for us. And this is on another brand that we do here that I'll talk about in a little bit. But yeah, so hemp and cannabis really wasn't even in the discussion, but it was recognizing that the family running the Beak Skiff saw a bigger vision for what this company could be than just, a local apple orchard.
Yeah. Well, for listeners who are unfamiliar with Ayrloom, can you talk through how it emerged from Beak and Skiff and also 1911 hard cider? And tell me about the values and visions that guide the brand.
Yeah. So for your listeners out there, so Ayrloom is the cannabis hemp brand of our parent company, which is Beak Skiff. Beak Skiff is this 115-year-old apple orchard upstate New York. Like I said, Syracuse. It's about 1,000-acre apple orchard, still operational. In addition to apples, we do a lot of beverage manufacturing. We have a fresh juice facility. We have a distillery. We have a hard cider facility. We also have one of the most well-known pick-your-own retail operations in the fall. So we actually voted #1 apple orchard by USA Today last year. So we do a lot of different things: agriculture, manufacturing, retail. And honestly, how we got into cannabis was really the New York hemp pilot program that launched around 2018, 2019. And at the time, we saw this boom of CBD beverages popping up and wanted to jump on that and leverage our experience and expertise with beverage making and start messing around with cannabinoid beverages. The reality is we did not have a crystal ball knowing that THC beverages were going to be in our future in the same timeline it happened, but we knew when that day came, we would be that much more prepared. Ayrloom was born again out of Beak Skiff and our hard cider brand, 1911. All the learning and headaches that we encountered over the years with that, and providing, really coming at it with best practices for Ayrloom. We wanted Ayrloom to be a brand, one that paid homage to the farm. So the name Ayrloom, one you can think of, it's an heirloom passed down generation to generation. So Beak Skiff is actually a 5th generation family run business. So obviously there's a play on that, but also many of your listeners might not know heirloom apples, just like heirloom tomatoes. Heirloom apples make the best hard cider. So that's really where the name Ayrloom came from. And again, we wanted to play on the spelling a little bit. But yeah, so that's kind of the genesis of where Ayrloom came from.
And for listeners who may not know, Ayrloom does not just make the cannabis beverages, but has a whole range of products. So take me through the full range of product lines and tell me about the timeline and what the launch strategy looked like.
Yeah. So when New York legalized or passed a bill to legalize in 2021, right? We at that time were still in the New York hemp pilot program. We were making CBD beverages, tinctures, topicals. That's really it. We knew soon after that we really wanted to go deep and really invest in a beverage facility dedicated to THC. And really that came from, looking at what else the other operators in this space in other markets. Again, this is well before hemp intoxicating THC. This is just the regulated dispensary market. And we kind of saw what was out there, the infrastructure or kind of lack thereof. And we're like, okay, this is where we can make and provide the most value to the New York market, is bringing our expertise of beverage making to the cannabis market. So we kind of got off to building out, designing a whole new beverage facility dedicated to THC. And we have actually 3 other beverage facilities on the farm here, but we knew we had to have a separate THC facility because at the time, you can't mix cannabis with any alcohol facility or anything else. You want to keep that totally separate. So built out at the time the largest dedicated THC beverage facility in the country. The bar was low, but that took about 1.5 years to really design, get standing and operational. But we knew beverages was always going to be the main focus. In that 1.5 years, though, we realized, again, beverages really only make up 1 to maybe 3% of dispensary retail sales. So not a big piece of the pie. We at the farm here, cultivate our own cannabis. We extract it into oil here, and then obviously we manufacturing. So we already had the raw materials, the active ingredients to then start making other value add products. So we jumped into fast acting effect-based gummies. We did high potency vapes. So really those three categories were the ones that we launched the New York dispensary market with. And we were there day one when the first store opened December of 2022.
Wow. And so let's talk about the trajectory from that time. So essentially, December 2022 to today, Ayrloom is now the number one cannabis drinks brand in New York. And the overall brand, Ayrloom, has a run rate of $5 million in sales monthly. So talk me through the mindset of what was the gap that you saw in the market when you launched? What problem were you solving?
Yeah, I think, again, coming from a business and a brand that was already doing beverages, right, with our 1911 hard cider, we knew that format very well, right? And we knew that in social occasions, you want to have something in your hand. And to be honest, the timing was also when I was starting to build a family. So I had a wife, 2 young kids. I used to smoke cannabis, but those days are long gone when you have little kids at home. So I wanted that ability to, discreetly consume in a format that was more socially acceptable, right? And I think that's what you hear from a lot of these cannabis beverage brands, that people still want to consume. They just don't want to be judged for it. So the beverages is really the perfect format for those consumers. And really it was also, again, recognizing that the infrastructure that cannabis beverages need, which is extremely capital intensive, didn't exist today. So we were like, we can really dive in and make that a reality. So those two things were really the kind of the catalyst for why we jumped into this.
Yeah. And then tell me about, so Beak Skiff has this expertise in hard cider and craft spirits. What differences are there in producing cannabis products and cannabis drinks?
Yeah, lots of different things. So maybe your listeners don't understand. So with the regulated cannabis beverages or products, this is dispensary only, really strict marketing and advertising requirements. We come from alcohol, which has a fair share of restrictions on what we can put on labels. We obviously have to get federal approval on formulations with the TTB, and then state liquor sign off on labels. That is kind of a cakewalk compared to what we have to deal with in cannabis. In cannabis, we don't have those agencies to verify something's ready to go to shelf. We only find out after the fact, once it's been made and on shelf, and hopefully doesn't get pulled. So that's obviously a real challenge there. But even just on a marketing and advertising, in New York specifically, we can't do your typical out-of-home. Meta obviously doesn't allow cannabis advertising. We can't do billboards. Basically everything that you would expect to be able to do for an alcohol brand, you don't have that ability with cannabis. So that's the regulated cannabis, which is the most restrictive. And then obviously this intoxicating hemp or D9 THC beverage category is more aligned with what we're used to in alcohol.
And so are you guys making any D9 hemp-derived THC products, or are you staying in the fully more regulated side?
Great question. So we're one of the very few that are playing in both categories. So as I've mentioned, we designed Ayrloom originally just for the dispensary channel. As just fate would have it, literally a month after we launched in the dispensaries here in New York, the D9 market really just took off. And kudos to a lot of the first movers in Minnesota where a lot of this began. But it really took off, I would say, Q4 2022 or Q1 of 23. And that's when we took all of our beverage and edible THC products for dispensaries and replicated that now for the D9 channel as well.
Wow. And then tell me a little bit about how that breaks out, because I understand that at this point, Ayrloom has scaled up to about 250,000 cases a year just in, less than 2 years, which is remarkable growth. So tell me about the development of that operation and how you scaled up to that level so quickly.
Yeah, I think so. That's obviously a combination of our adult use dispensary channel as well as the hemp D9 channel. But the bulk majority of that is still really in the New York dispensary channel. And that was a bigger challenge because unlike the D9, where you have your 3-tier model, you have your alcohol distributors with the infrastructure to handle beverages for distribution, we didn't have that in New York for the dispensaries. The one thing we did have is the experience of self-distributing alcohol in New York. So we actually have a spirits and apple wine line that we have always been self-distributing. So we knew, one, how to do it, but we also knew how challenging it is to scale. So we were very proactive in identifying a third-party distributor that we could work with in New York that really covers the metro New York area. So upstate, we actually self-distribute to all the dispensaries. Syracuse is pretty centrally located in upstate New York. You can get to basically all ends of the state in 2 hours. But metro New York is really a different beast when it comes to distribution, especially with dispensaries. And this is, I think, your listeners might not know, with alcohol in Manhattan, those distributions happen middle of the night when there's no traffic, right? For dispensaries, you can only deliver or distribute during operating hours. And that's usually from like 10 a.m. to 8 p.m. There's a lot of traffic at that time. So it's a difficult business to do distribution for beverages in the dispensary channel.
Wow, that's surprising. I didn't even know that. So tell me about the SKUs. I'm interested to hear, what are some of the best-selling SKUs and what does the full product range of beverages look like?
Yeah, so we started out initially with just seltzers, so low sugar, low calorie seltzers, kind of a low hanging fruit. But we knew we weren't going to stop there. It was really just, okay, proof of concept. Do dispensaries actually want seltzers? What's the feedback from the customers? And it was great. And obviously we were selling out. We were getting great feedback from the customers, but they obviously wanted some more full flavor. And that's what the innovation really leaned in on, was that full flavor liquid. So initially, the next one that came out was our lemonade, which is still probably a top 3 SKU for us. But shortly after that was, I think, a real first, which was our Honey Crisp Ayrloom drink. So this is 100% fresh cider from Honeycrisp apples grown on our farm here, pressed in our cider facility, and then now infused with our THC that we grow here. So that was a huge, we're biased. We love our fresh cider, but it was so refreshing to see and hear from customers how much they loved it as well.
And give me a sense, are there things that work well? I want to talk about dosages too, but first, from a flavor perspective or a format perspective of seltzers versus, higher calorie, fuller flavored drinks, is there a one channel like the hemp derived THC in liquor and wine retail? Is there something that works better in that channel versus the dispensaries, or vice versa? And then let's talk dosages.
That's a great question. I think when we talk about dispensaries, I would definitely say our full flavor beverage lineup does a little better than our seltzer. In the D9, depending on the market where D9 products are sold, if it's liquor store, if it's C-store, if it's grocery store, right? We know grocery store, some of our SKUs are going to do much better than in the convenience store, right? So we wanted to come at this with a wide range of a portfolio because we just didn't know ultimately where D9 beverages or regulated beverages would end up.
Yeah. Okay, dosages. So in distribution, in the dispensary channel versus the D9 channels, what dosages are working best right now?
Yeah, so in New York, where again, we focused the development of the brand and the products, when we initially designed and printed the first labels for our beverages, New York was only going to allow 5 milligram beverages in dispensaries. So we launched the whole product line in 5 milligrams, but soon after they were like, okay, we're going to bump it up to 10 milligrams. I'll be the first to admit I was kind of digging my heels in, that I didn't want to go to a higher dose. I always looked at beverages as a more, sessionable format that people can have 1, 2, or 3, just like they do with alcohol. But we quickly saw on the dispensary channel, the 10 milligrams outsell the 5 milligrams, 4-1.
Wow.
And again, I think in the D9, it's tough to make an easy comparison because state by state or market by market, it's different. Some states only allow 3 milligrams. Some states allow 5, some 10, some even more than that. So we, actually have 4 different dosage formats. We have our 1 milligram micro line. We have a 3 milligram line, which is designed for a certain number of states that only allow 3 milligrams. And then we have kind of the full portfolio in the 5 and 10s.
Wow. All right. So give me a sense. Now you've worked in both spaces, cannabis and alcohol, both highly regulated spaces. What would you say are the key differences, like either operationally or strategically or legally in those channels, that it might be good for other entrepreneurs to know?
Challenge. I think the challenge is really in the D9 space in particular, it's changing day to day. So you have to be extremely nimble. And even coming from the regulated cannabis market, where being nimble there was always valued more than even in like the hard cider space. But D9, you could plan to launch in a new market next month, and then all of a sudden legislation or regulations change that close that market off. Or you have to change a new symbol on your label to meet the regulations. It's very humbling. I think the more nimble you can be as an operator, as a brand, the better. Don't go, all in on any one market, any one product, or any one building up or wasting too much working capital on inventory. So I think that's really the name of the game there, is just being nimble in the D9 market. I think with regulated cannabis, one of the pitfalls there is people being too optimistic about growth or the financials. And I think in cannabis, it's one of those industries where price compression is the norm and expected. And different markets, price compression happens way more rapidly than others. So it's ensuring that you have a good financial model to meet your operating, marketing, sales needs without, overextending yourself there.
That's a great point, because I think, I'm curious to know, and I haven't talked to that many entrepreneurs in the dispensary side of the business. Do you think about margins differently on the dispensary side of the business versus the alcohol side of the business, or does it more or less sort of run the same?
Definitely does not. So in the D9 hemp-derived space, that is margins very similar to an alcohol business, right? Even alcohol distributors, it's roughly the same as you would with a beer or wine brand, and even with retailers, maybe a little bit more than what a beer retailer might require, but it's around that 30% kind of target. In the regulated market for cannabis dispensaries, we have a thing called 280E. It's an IRS tax code that means if you are working with a regulated cannabis product, trafficking, manufacturing, selling, you now can't deduct normal operating business expenses, which for a retailer, the extreme, their only deduction on their income is that cost of product they're selling. So staff, insurance, utilities, rent, none of that is deductible. So because of that, dispensaries always keystone pricing. So they double up. Whatever wholesale number you give them, they double. So that same kind of 280E challenge also applies to a manufacturer as well. So where we can work on a little slimmer margin for D9, we can't do that as much in the regulated adult use space because of the tax liability.
Wow, that's fascinating. And I did not know those ins and outs. I mean, what a what a challenge there, just from a financial perspective. So your background comes in very handy for that. I'm curious because you do have such a deep background in finance and strategy. Are there any sort of lessons or, favorite mistakes from prior roles that you brought into this role?
Yeah, I think my previous role was covering a lot of tech stocks in Wall Street. And I think the biggest lesson I learned was just, again, that planning on this never ending growth and relying on this cash burn or planning for this cash burn to turn positive, right? And so seeing just the pitfalls of all these companies that just burn through cash with all these high hopes of where they can be, I knew from day one we had to build a business model that was sustainable, cash flow positive from day one. And thankfully we were since day one.
Yeah. Yeah. And the discipline needed to do that, I think, is definitely challenging for a lot of businesses because you're just thinking like drive growth. But that can turn out to be a folly. So tell me, was there a particular moment in this 2-year rise that like you knew, okay, we've hit product market fit for Ayrloom and its beverages? Were there certain signals or feedback that convinced you like, okay, this is it, run with it now?
Yeah, I think it was really, the first year being in the dispensaries, because even taking a step back, the D9 category channel, the first year or so was much less developed than it is today. So really the growth in the initial years was in the dispensary channel. And I think the feedback loop we had with our customers, either the retail partners or the end consumer, really solidified our thoughts that we knew our beverages tasted really well. And I think personally, I tell this to people, I remember 6 months into the New York market, walking down New York City, and someone mentioning to their friend, yeah, I just drank an Ayrloom or something like that. And it was almost applying Ayrloom to THC beverages, just like I Googled something. And that was just, a moment I'll always remember. But again, I think it's also, we've really leaned in with Ayrloom, whether it's beverages, gummies, or vapes, more fun, approachable products, right? I think a lot of times cannabis brands lean into the legacy connoisseurs. And we wanted to be kind of the opposite of that. You hear the term, cannabis brands trying to attract the cannabis soccer moms, so forth. Well, that's definitely it, but it's also, even the men out there who just want to try something more discreet and who might get more turned off by flour or a product that just looks like it's going to put them in a hospital. So we really wanted to be fun and approachable and leverage that brand trust that we built with Beak Skiff in 1911 in our home state of New York. So you're like, here is Beak Skiff's newest cannabis product. It's tested. It's produced under the same quality standards as everything else that we make. So it just gives that confidence to that consumer. And that confidence is still something that this whole cannabis industry is continually trying to build.
Definitely. And, let's talk about the visual identity. So Ayrloom, like you mentioned, it feels very colorful. It feels approachable. You could see this branding and this visual identity on like a probiotic soda, or it just feels like very, like it would appeal to so many different demographics, not just the habitual THC user. So tell me about how you developed the branding and the appeal that you're looking to create there.
Yeah, really, it's a lot of inspiration from our hard cider brand, 1911. So if any of your listeners see our brand on a retailer shelf, the 1911 brand, it pops, right? We want it to be colorful, fun, and kind of just draw your eyes in, which, initially we want to take that exact same playbook and bring it to Ayrloom, but there are, again, really strict marketing and labeling restrictions with cannabis. So we had to still try to find that ability to get that fun, colorful label, but still be compliant with New York's very restrictive, appealing to children restrictions.
Yeah.
But the inspiration comes from 1911 and Beak and Skiff products. If you see an Ayrloom, Beak and Skiff, a 1911 product next to each other on the shelf, you'll know they all kind of came from the same manufacturer. That being said, we wanted to make sure Ayrloom really stood on its own as well.
Yeah. Is there something about Ayrloom's story or values that people in the industry might not know, but they should?
Yeah, I think many people don't realize that. So Ayrloom, again, is the cannabis brand of our parent company, Beak and Skiff, which is a 115-year-old apple orchard. In the cannabis world, I don't know many 100-plus-year-old operations getting into cannabis. So it's really unique there. In addition, not only is it 100-year-old, but it's still run by the Beak family and the Skiff family. So that's pretty rare to have a fifth-generation family-run business, not only still being successful, but willing to jump into totally new categories like cannabis.
Yeah. And why do you think the family had an appetite for innovation in this way? Give me a sense of how did the process go to leaping into this whole new industry?
Yeah, I think it was, again, when we got into the hemp program in New York back in 2019, right, we knew that we could read the tea leaves at that time that the consumer, especially the younger generation, were looking for always a healthier alternative, right? We saw the writing on the wall when it comes to alcohol sales and that decline. Obviously, that ramped up after COVID, but we knew we just had to offer Beak and Skiff 1911 our customers a healthier alternative, right? What we like to say is 1911, we all love it here, but it's not making anyone's day healthier, right? We want to be able to make a product like that makes people feel good. It also makes them healthier. So, and I think really we recognize the benefits of cannabis. Even personally myself, our CEO, we really felt strongly that we needed to leverage Beak and Skiff and 1911's kind of brand goodwill in the community to help destigmatize cannabis. Wasn't easy in the beginning, but I think we've definitely won more people over than lost.
Yeah. All right. Well, let's talk a little bit about sort of strategic and operational unlocks. What would you say are the key levers that drove you from launch to becoming one of the top cannabis producers in New York in just this 2-year period?
First and foremost, I'm going to have to say it being a first mover, being in the hemp pilot program for New York. We were given one of the very first adult use cannabis cultivation and cannabis processing licenses. So that allowed us to get up and running as quickly as possible. But we had the risk tolerance to actually start building a brand new facility before we even had those licenses. So that was a gamble that definitely paid off in a big way. That allowed us to be at that very first dispensary in New York City, day one, December of 2022, right? And that we were one of 4 brands, I think at the time, one of 2 edible brands and the only beverage brand. So we got that brand recognition right away, but it didn't just stop there. It's really from there, making sure that we can scale manufacturing, maintain the quality that we expect, and being that tried and true trusted retail or supply partner for our retailers. So that's giving the white glove service of making sure that they get product when they need it. And that really goes a long way in the dispensary channel, especially with the challenges around cannabis distribution.
All right, so you build this 50,000 square foot factory. This is before the permits are even issued. So you have this idea that this could be something big. And from there, tell me about the physical operation. Like, what does it look like? And are all Ayrloom products produced on site?
Yeah, so a great question, right? I think one thing that we do best here is that farm to can mentality, right? Or seed to sips, actually, in the alcohol side. What we thrive on is growing an agricultural product and turning that into a value add product, right, for our end consumer. And we wanted, whether it's apples being pressed, turned into hard cider, served at our tasting room, we wanted to take that same model and apply it to cannabis. So We grow on site here. We grow outdoor cannabis only. We have an in-house extraction team. So we take all that cannabis, extract the THC, extract the minor cannabinoids. And then we have a large manufacturing facility where we do beverages, vapes, fast-acting gummies, tinctures, topicals, pre-rolls, basically everything except for whole flower. So all the value-add product categories of cannabis.
And how do you think about scaling? So right now, most of the presence is in New York, but how many states are you in total? And talk a little bit about your criteria for entering new states.
So we're in 14 states total, with New York being the only adult use state, and then 13 hemp D9 states. Obviously, when we launched, or we were planning to launch in the dispensary channel, we always looked at the opportunity of expanding the brand into other dispensary markets. But the D9 opportunity kind of fell in our lap. So we knew we could leverage, kind of that channel to expand the brand without having to build multiple manufacturing facilities, right? With regulated cannabis dispensaries, I have to build a new beverage facility in every new state I want to go to. D9, everything can still be centralized and produced here. So with the D9, that's really the focus for the brand expansion. Initially, the past couple of years, it's been an interesting wild ride of finding the right distributors to bring on Ayrloom, who are willing to even bring on D9 drinks. But what we're seeing right now is the bigger, better, more reputable distributors are starting to enter the category. Ones that we've already built relationships with from our alcohol brand as well. So that's what we're looking at, is not just what market can we jump into today, but what market has the best distributors that we have good relationships with. What market has the safest and friendliest hemp regulations. And that's a key thing, right? We don't want to just invest all this money into a new market where the next legislative session, it gets kiboshed. So
Yeah, definitely. Well, what marketing channels have been most successful so far for growing Ayrloom?
Yeah, out of the gate, a lot of focus for adult use is really just bud tender education. So in-store activation. That's really our only tools that we can do compliantly in New York dispensaries. So we invested heavily in a New York sales team to boots on the ground, activations at the most amount of stores. So just making sure those bud tenders, those store owners see an Ayrloom face, every other week, and same with the customers. And the benefit also is with beverages, that's a category that we can actually make a non-infused. So basically the same liquid without the cannabis. And we can do those samplings that we're used to in alcohol. Right? You can't do that with a vape. You can't do that with flower. This is still a category where I can give that person that same experience and taste profile without the intoxicating ingredients. So that's really was the strategy, and kind of still is the strategy today in the New York market, which is more heavily restricted on what we can and can't do. Outside of that, we really lean into our experience with the 3-tier model, working very closely with distributors, boots on the ground. Again, same kind of mentality when it comes to sampling and activations in retailers. It's everything that we've done that's been successful for our 1911 hard cider brand, and applying that same playbook to Ayrloom in the D9 channel.
And what does the team composition look like? You mentioned like boots on the ground. Are these like salespeople who are overseeing both the hard cider and Ayrloom products, or how do you think about fueling that part of the business?
Yeah, it's a great question. In New York specifically, we have a solely dedicated team to Ayrloom in dispensaries, because that channel is very different even than the alcohol channel in New York. Outside of New York, we kind of use a hybrid sales team that oversees both our 1911 hard cider brand as well as our Ayrloom D9 brand.
Nice. All right. So talking about scaling, I know that a lot of entrepreneurs who are listening to this are going to have questions about this. So what, for a drinks entrepreneur, what advice would you give them about knowing when it's the right time to put the fuel on the fire and start to scale?
Well, first and foremost, I mean, your listeners obviously know how super capital intensive this category, not just cannabis, but all beverage categories, right? So that's first and foremost, making sure you have the capital, the working capital to really, start and scale up. But for us, especially with Ayrloom, it's a proven market fit. So I think the smaller batches you can do to get that customer feedback loop going and to get that confidence that, what you can produce in that 5-gallon bucket can be scaled to 100 gallons, you can scale to a 10,000 gallon batch. That's really, I think it's starting slow, right? I think especially in this cannabis beverage category, there's a lot of FOMO. People want to move quick and fast. Ultimately, what you see is just subpar products or liquid in the market, which doesn't help the category long term. Right? So just take your time, make sure you have the right product and it can scale.
Yeah. And then I wanted to ask you a little bit about DTC. Are you seeing the direct-to-consumer channel as a meaningful sort of channel in any part of your business, whether the hemp-derived side or the cannabis side? Or do you do any of that at all?
We do. Initially, when the D9 side really launched about 2 years ago, that was really the only option. No distributors were willing to take this on. But ultimately, we knew that wasn't our forte. That wasn't our strong suit. We really wanted to lean in on the wholesale distributor retailer model that we knew best coming from alcohol. So I think the D2C model, for some, it works. We just knew that's not what we do best. We knew with price compression, the customer acquisition costs increasing as more brands get into the space, the shipping costs not going down anytime soon. It's a tough format to really succeed long-term in D2C. So that's why we still do it. I think it's just we're more heavily focused on working with our distributor partners and retail partners.
And what does a distributor network look like? Are you working with, just one distributor per state, or do you have many distributors in the various states? Like, how do you conceptualize that?
Yeah, right now, for the most part, I think across all the 13 states we're in, it's one distributor per state, which has been nice because even in the hard cider space, we have sometimes 2 or 3 distributors per state. So it's a little better.
And is it mostly beer distributors or who's picking up those products? Mix.
Yeah, it's a mix. We do have some beer distributors. We have some wine and spirit distributors. We've even worked with some NA beverage distributors.
Yeah. It's interesting because we see a lot of brands, choosing either the liquor and spirits or the beer, and some are a mix of both. It just seems like it's such an evolving landscape right now.
It really depends ultimately where we think the cannabis beverages will be sold, whether on-premise is going to be an option or not. I know a lot of states that are trying to put guardrails and regulations in place are hesitant to allow on-premise. That's always a tricky thing to figure out how you can get the market comfortable with people consuming cannabis and then getting in their cars, right? We've been trying to do that in the adult use dispensary market here in New York for 3 years now and haven't succeeded yet. But I think that obviously depends on where, if it's convenience store, grocery store, on premise, that really should drive you to which distributor you should be working with.
Yeah, and then in the D9 side where you're working with distributors, how do you incentivize retail partners or sales reps? It's such a challenging environment. Everyone's competing for shelf space. I've seen like in Total Wines and other places, people just sampling products without the THC in them so they can just give them a sense of what the product tastes like. Is that something you're doing? And like what types of promotions or incentives at that level are working for you?
Yeah, so in the adult use dispensary market in New York, there's no pay to play allowed. So really the only key to success there is being that reliable supply partner for your retailer. And then having kind of a boots on the ground sales team that do activations in dispensaries. But beyond that, We can't do any pay to play for shelf space. We can't offer the end customer rebates, BOGOs, anything like that. In the D9 side, obviously we have a little bit more flexibility, but a lot of the distributors that we're working with, especially the bigger ones, are taking their same alcohol thinking when it comes to what's allowed for pay to play or discounts or QDs and applying that to cannabis. So we really kind of lean in, like, what do those distributor partners allow and feel comfortable doing? But at the end of the day, it's really just, how do you offer that white glove service to that end retailer? Do they need, POS? Do they need activations? Do they need whatever we can do that, again, gives that retailer the confidence that we're there to support them, but also making sure the distributor knows that we're staying above board on everything.
Yeah. All right. Changing tacks a little bit. I'm curious to know what challenges you faced. What was the hardest day of building Ayrloom, and how did you overcome it or get through it?
I think a lot of your listeners probably will remember a lot of the headlines of the New York market the first year it opened. It was just a clown show, to put it nicely. How litigations and regulations kind of held up the rollout of retail for the first 12 or 15 months. So that was really tough. When you build out this new facility, you expect to be servicing 200 retail partners within 12 months, and you're still only at 20.
Yeah.
So that was, a big humble pill that we had to swallow there. But I think another more fun one that we kind of laugh at now, that many people probably don't realize from Ayrloom, we built out this large cannabis beverage facility. We bought this really sophisticated canning equipment. And right before it was delivered, we found out that it couldn't work with your typical child-resistant exo lids.
Oh, no.
Yeah, exactly. So that's actually where the team, and again, a ton of perseverance in this team here, we identified a lab that does child-resistant packaging testing and got one of the very first, I believe, CR certificates for a regular 202 12-ounce can end. And that was, a Hail Mary that, again, is paying dividends today because it's a much better packaging product than an exo lid. It's just, and now I think a lot of the other brands are able to reap the benefits of that by showing those regulators in other states, like, this is now a certified child-resistant can end.
Yeah, that sounds like it worked out at the last minute.
It did. It was a Hail Mary.
Oh my gosh. Well, speaking to the team and its resilience, tell me a little bit about the composition of the team. Like, where are people divided up and how many people are working for the company?
Right now, it's just shy of probably 100 full-time staff, where, again, we have cultivators, we have extraction, we have manufacturing, fulfillment, distribution, sales, accounting, marketing. It's pretty evenly split, but, I think a lot more focus on the sales growth and marketing growth as we expand into new states and can maintain that production control here on site.
Yeah. And is that 100 people just for Ayrloom or across Ayrloom and Beak Skiff?
Just Ayrloom.
Oh, wow. Okay. All right. So I wanted to ask you because, yes, finance leader, right? Finance leader and president of this brand. How is it that you approach capital allocation between innovation, operations, like marketing? Like, how do you conceptualize and think about that?
Yeah, I think for us, initially it was making sure we have the facility to scale to where we expected the New York market to be. And again, I did not have a crystal ball knowing this hemp-derived market was going to exist. And when it developed, it didn't have that perfect timeline in my head. So it was really just making sure we had the facility to scale to meet our dispensary market assumptions for the next 2-3 years. And starting slow. We didn't go out of the gate with 30, 40 SKUs. We really launched with 10 or 12 SKUs. And again, made sure we got that customer feedback that what we were doing was what the customer, what the retailer wanted, and then started building different iterations off of those. So it wasn't trying to build it up really quick just to inflate top line. It was trying to build something that we knew could be repeatable, scalable, and ultimately what the customer wanted, and maintaining a focus on cash burn discipline.
Yeah, yeah. And where do you see the brand 5 years from now?
My hope and my dreams are that the cannabis beverage market continues to grow, and Ayrloom is a nationally recognized cannabis beverage, edible, and let's say value add product brand. So whether that's through new regulated dispensary markets or the D9 market continues to grow and expand.
Yeah. And what do you think the next wave of innovation will look like in cannabis and D9 beverages?
I think in cannabis and D9 beverages, one of the things that we did out of the gate in the dispensary channel in New York about 3 years ago was launching our gummies as an effect base. So really leaning into minor cannabinoids. So we came out with something called Pillow Talk, which has CBN and other functional ingredients that help with sleep. Right, so it gave that end consumer very quickly the idea of like what the purpose of that gummy was, not just the flavor. And quickly we saw that was really the format or the marketing format that customers, especially edible customers, wanted. They wanted to just be told not just what the flavor is, but what's this going to do to me. We haven't really seen that to the same extent yet in beverages. There are a few brands now jumping into this. I expect that to continue to ramp up, really leaning in on the minor cannabinoids or other functional ingredients to give the end consumer, precise, repeatable effects.
Right, like focus or, relax or any of those things. I mean, we've seen so much success with that in the non-alcoholic space already. I think that's a huge area of potential innovation for the THC and, both sides of the THC space. Okay, so last question. Let's say that an entrepreneur asks you for a book, a movie, online class, someone or something to follow for inspiration or guidance. Who or what would you recommend?
Sticking with like kind of the cannabis beverage category.
Could be anything.
I'll say with that, I think that is more, what I like to tell people is there's no true experts in this category yet, right? This has only been around for a handful of years. And so that means there's not one person, one book, one trade association, one group that has all the answers that an entrepreneur is going to need. So really like how we got to where we are today is just following everyone we could on LinkedIn, listening to amazing podcasts like this, like reading newsletters. So just really devouring as much information as we could, which is overwhelming, but that's really how you can kind of identify where there are potential gaps in the market or identify people who you think are really up and coming in this category. And I will say this category, cannabis beverages specifically, I haven't seen a group of operators more willing to help out an up and coming entrepreneur as much as in this category. We would not be here today, Ayrloom, if it weren't for an amazing cannabis manufacturing facility out in California that we visited in 2021. And the same for a cannabis manufacturer in Massachusetts that we visited the next year, who I reached out, cold called on LinkedIn, and they were very open-armed and welcoming.
Yeah, that's great to hear. And I have heard that from so many entrepreneurs in this space that it's very much a lift all boats, pay it forward sort of business. So that's amazing to hear. All right. Well, I think that's a great place for us to conclude. Mack, thank you so much for coming on the Business of Drinks.
Thank you.
Welcome back to Last Call on the Business of Drinks. I'm Caroline Lamb with Erica and Scott today, and we're zooming out to talk about some of the macro trends that are shaping what we're drinking. We dove into a new report from Numerator on beverage behaviors. It's pretty extensive, but a few things immediately stood out to me. Though alcoholic and non-alcoholic spending are both growing, non-alcoholic beverage spending is outpacing alcohol, and that's driven by more frequent trips to the store for it, rising prices, and convenience. Convenience is now the splurge. Gas stations, clubs, and online ordering are where most of the growth is occurring. And even though 56% of shoppers now say that price is the number one factor in their beverage buying decision, convenience stores are the fastest growing. And obviously, you're paying more at a convenience store than at really any other store. So I couldn't help but speculate this has a little something to do with a trend I've been following called little treat culture, which is sort of a TikTok term, but it's something that Gen Z and millennials partake in. It's the afternoon matcha. It's like the $6 canned functional soda that I buy every single time I grocery shop and reward myself for grocery shopping. And it's these micro indulgences that are trending with younger people that I've seen connected to the fact that larger luxuries are more inaccessible to a lot of people, like under 30, most notably house buying. So instead of buying houses, we buy expensive drinks at the convenience store. So there's a massive amount of info in this report. And I'm really curious to hear what Erica and Scott have distilled from it to maybe help those who are not immediately represented in the report. So like legacy brands, alcohol brands, and really anyone trying to connect with the next generation.
I completely relate to the memes that say, my parents' generation were thinking about buying a house in their 30s, and I just, I'm content to shop at Erewhon. It completely, yeah, I connect with that. I feel seen. What stuck out to me from the report that might be pertinent to founders, entrepreneurs, folks in the beverage space is that these changes are about what's different, not what is more or less. So there have been a tremendous amount of what I'll call like channel shifting, channel phasing, right? Folks are getting beverage, whether it be adult beverages or otherwise, from convenience stores, from quick service restaurants, from Costco, right? The traditional idea that you might just go to a liquor store, a specialty liquor store, maybe a big box store, a chain store, or a restaurant to get your alcohol or beverage in general. That is not the case in 2025. Folks have a lot more options and they are viewing them with, I'd say, a lot of open mindedness, to the point that you raised earlier, Caroline, that consumers say that price is the most important factor. Also in the report on that same page, 45% of respondents said they had changed where they shopped to seek lower prices and better value. And we see this in physical locations. We see this particularly online. I was amazed to find out that Walmart.com surpasses Amazon when it comes to the delivery of non-alcoholic beverages. And, this is my own blind spot more than anything else, but it certainly is not, I think, the first thing people think of when they think of online beverage retailing is Walmart.com. And it's an outlet that would be incredible for any brand to attend to, but one that they should at the very least have their eyes on. Lastly, the report called attention to the fact that finally, 5 years later, out of home trips, restaurants, be they quick service restaurants, be they fine dining establishments, they finally returned to pre-pandemic levels. And this is, I think, something that we've all been waiting for a while, but we can't be completely dependent on just these more frequent trips if folks are spending less, which they might be depending on what they are buying. So much to unpack. It's a 50 something page report, but there were a lot of takeaways. And I know, Erica, you kind of really focused on what folks can learn and take away and apply to what they're doing.
Yeah, absolutely. And worth noting that the Numerator survey was based on more than 2,000 respondents across the United States. They had some really great actionable insights that they encapsulated that we wanted to make sure brands knew about. One of them is, to understand the varying state of value, right? So consumers, like we've just discussed, they're increasingly shopping in value-driven and convenience-oriented channels. That might be online, club, dollar stores, gas stations, convenience stores. But each of these channels offers a distinct interpretation of value that could be low unit prices in dollar stores or like bulk savings in clubs. So, understanding that And knowing that, consumer behavior is fragmenting across these environments. And so brands really do have to adapt their retail strategies to meet these varying expectations. And just knowing that there may need to be some differentiation in strategy between store types. So the actions they called out for brands and retailers is to win shelving space by offering large count SKUs in clubs for stock up missions and small low cost packs in dollar stores to maintain accessibility. Their second action was to incentivize trips in C-store and online environments by tying convenience with limited time value offers, so like grab and go discounts or delivery bundles. And then a separate set of takeaways was around rising to the out of home occasion. So we know consumers are returning to mobile routines, and beverages tied to on the go occasions like energy drinks or sodas or bottled water are all gaining share. And food service plays a strong role in shaping brand preferences, especially among heavy QSR spenders. So that's an important channel where there's opportunity. So, they say, look, by combining these convenient packaging and strategic partnerships, brands can really reignite their relevance for consumers. They can drive trial, they can extend their influence across both restaurant and retail environments. So, some suggestions are to prioritize single serve and portable formats for C-store, QSRs, and mobility channels. Two, to co create food service activations with flavor exclusives or value bundles at high indexing chains. And lastly, to boost brand visibility at drive throughs, gyms, transit hubs, and sampling touch points. So I think, these takeaways, it's definitely worth any brand thinking like, how can I show up to meet consumers' needs in each of these types of outlets, and just recognizing that outlet by outlet type it's no longer one size fits all. It's really like, hey, we need to think about each of these different outlet types as a different type of retailer and make offerings that are going to resonate best with that audience. Fantastic report for people who have not seen it. And we'll put the link in the show notes so that you can easily find it.
Wonderful. Well, thank you again for joining us on the Business of Drinks. Please follow us on Apple, Spotify, or wherever you're listening. Tap the notification button so you'll be the first to hear when a new episode drops. And please help us spread the word. Share in the star ratings, share with your friends. It really helps us find some new listeners. And finally, if there's anything you'd like to hear us cover on the podcast, please tell us. We are at podcast@businessofdrinks.com, or reach out on Instagram or LinkedIn, where we are always checking our messages. We will talk to you next time.